folks, I'm L.A. Little and this is your weekly TA Wrap, where we take a look at these markets from a perspective of trend, supply and demand on the chart, as we like to call it, classical, neoclassical TA. And we ask ourselves each time, what happened last week and what might it tell us about the coming ones? I do this show every Sunday night, live at 9 o'clock Eastern Time, here from the base of gorgeous Rocky Mountains. A lot of wet weather here. I know it's not that way around a lot of the country, but you know, the water coming down here, at least in the mountains, so that will probably flow to those places that need it. Drought situations in California are pretty bad from what I hear and what I see on the maps, so hopefully they'll get some rain soon. As far as these markets, you know, folks, it is like a broken record, right? I mean, there seems to be no end to these markets trying to climb higher and higher and higher. And last week was no different, right? We had a nice big pre-holiday type rally. It continued on just as we've seen before. And if you look at the ending numbers for the week, you had the Dow Jones up 114, 115 points, 0.7. The NASDAQ 2.3%. The Russell 2.1. Those were the leaders. And when you're looking at you know, the leaderboard and you see these two leading, that's a good thing. You can see that the Russell's still down on the year, 3%. S&P has been the strong one, up 2.8, and the other two pretty much flat. But you know, decent gains again on the week, and they continue to push higher. So you can't really look at that in a negative tone until you look at the charts and ask yourself, okay, is this thing going to be able to break out and keep running? I'm going to start with the daily, then we'll flip to the weekly. If we look at the daily, right, we're pressing up here. First of all, we had, really, this was the major price point that needed to be gotten over. That was the swing point high back from April 4th. That's the breakdown bar on many of the stocks and sectors and indexes. It gets over it, does it with absolutely no volume, right? But it is over it in price and looks like it's going to try. And I can't see how it's going to probably miss testing that high at least. Now, even on a high here, that's a swing point high, even on a high, there is absolutely no volume there, but we even had less volume coming up because of the Memorial Day holidays coming up. So, pressing up, yeah, doing it again with, you know, no volume, which has been the case on the pushes to the north. You got a bunch of nested ABCD structures we talked about last week. You know, you've got them all over the place. You've got one here. This one basically is done. You had one back here. This one has a little bit farther to go. You have one here, you know, coming off this. Excuse me, not that one. Take that one back out. Starting from here, back down and up. That one's just about done as well. They're all kind of, you know, the ones that are nested here are about 1902 to 1904. Then there's some up around 12, some up around 20. And so there are some structures that can take this thing higher, but really, it's like it's gasping for air on the way up. If it breaks over, volume expands, then it's a different story. But right now, that isn't the story, and that's not what we see. On the weekly, price point high on the weekly, 1897.28, did 163, almost 164 there. You did 136, you got over it, you're staying over it. Right? That says this thing can go higher again. And so there's still the potential for higher prices on this push, and we'll see if it wants to do it. That's the S&P. S&P still looks pretty good. Doesn't look bad at all. If I look at the NDX, which has been the strongest one, next to the S&P of late, the NDX also was able to push up, get over the highs. And those highs, again, breakdown bar on the 4th. I didn't think it was going to be able to get over it, but it did. So now you've got ABCD structures that have more than completed, right? This was basically complete already. Now it's more than completed. and you're over the breakdown bar, and that says that this thing can try to push up to the next one. Now again, what's going to take it on up there without any kind of a pullback beats me. I don't know. I don't know how much more, because if I look at Apple, I look at some of these others, I'm not sure how they carry up there. But it is on a trajectory and a path to try to get up to that level. We'll just have to see if it wants to keep going or not. I suspect you're going to see some sort of sideways trade, some sort of a pullback off of this. Here's your weekly. The weekly's coming into the next big zone, 36.76. You're sitting at 36.54, so another 12 points higher. Again, you're climbing with nothing, but it is climbing still. There is potentially an ABCD structure still in place on the weekly, but when you see price rise as it does, right, it makes that structure much less damaging if in fact it starts to propel down. Now remember, there are swing point lows here on the daily and the weekly, so if it does come down, it's going to get a nice little push to the downside. But you know, right now, this thing doesn't even look like it wants to come down. And if I look at the things that are making it up, in particular, you know, Apple, Google, those stocks haven't given it up. Here's Apple, you know, nothing on it, but it's still heading higher. Google finally turning around and actually, you know, pressing up about a third of the way back up towards the highs. Microsoft is the other one. That's about 33% of the weighting between the three. Microsoft still hanging at the highs. The other big part of that is the SOX. The SOX hasn't shown all that much juice, but it's not breaking down big. As a matter of fact, just got back over it on the weekly here. So the SOX doesn't look like, you know, it has, you know, these all look like range trades still. The latter two, Microsoft and the SOX, with Google, Apple still able to push higher. So there is the possibility that this keeps pushing higher. And if I go look on a weekly at the broader composite is coming up to the last of the zone, you know, the last of the major breakdown bars, right? So there's like 5 major breakdown bars, a lot of volume across it. The bottom one, the top of it is 41.85. We closed at 41.85.81. It was 41.85.19, so you're over it. Less volume, but you are over it. When I look at charts and I look at markets that move right up to areas that they should see sellers show up, and in this case, no sellers, no buyers, but more buyers than sellers, price appreciates. For this to continue, the buyers have to show up, right? They have to show up and keep pushing. Because if they don't, we've seen the same story over and over and over again. We'll just pull this over and look at the daily here. All these pushes up over and over have seen sellers. And that's been true, you know, all the way on the way down, right? And you just stair step them down. Now, when you got down here, you got a nicer push up, higher low, a little higher low, a little higher high, a little higher low, now a higher high. Now you're pressing back above these highs. This looks like a classic, okay, I don't want to go down anymore. If you don't want to go down anymore, that either is sideways, more sideways, which means you pull back again and you're within this, or you actually start to break out. And so the weaker sectors, the weaker indexes are the ones you want to watch to see if that's going to happen. And so when I'm looking at this, the NASDAQ composite and the Russell are the main two on the indexes where one wants to see evidence of continued pushes. So a little ABCD, I'm looking at the Russell now on the weekly, on the daily. A little ABCD structure here on the daily, just finished. You got swing point highs up here. If you take and you pull over the Russell on the weekly, you can see here on the weekly, this one never has been able to really get anything going. It did test the lows, it tested them on less volume, getting its bounce off of it, but the Russell is going to have to come back up and start taking out, on the daily basis, start taking out these highs, because so far, the Russell has not been able to put in higher lows, higher highs like all the other indexes now. So it's the last one. The NASDAQ composite next to the closest. The NDX, of course, is pushed in. If we look at the Dow Jones, the Dow Jones itself still hanging up there, coming back into the breakdown bar from last week. There's a swing point high over there. Again, it, just like everything else, is coming up with no volume. If you look at it on the weeklies, just changed again, got over the swing point high. Now a bullish trend on the weekly again. So, what can I say? They just keep pushing. They keep pushing. We got the European Union elections. We've got the Ukrainian elections. They've already crowned a victor, evidently. We've got a day off again tomorrow here in our markets, and then that's going to leave a shortened weekend, a shortened week, 4 days. Typically, end of month is typically somewhat positive, so that's a positive. The fact that you're coming off of a holiday usually is reasonably positive. There is Fed intervention again this week in terms of money, money flowing into the market, a couple big days. So this market has everything it needs to actually push. And if it does do that, then maybe it finally changes this picture, because so far this picture has been, we want to try to take out the lows. I don't know that it can do it. I'm not going to guess and assume it can. I'm going to wait and make it show me that it can. If it does, then I'll lean even more to the long side. All through this, we've never given up our posture of leaning long in our portfolios, because the longer term trends still favored it. But there's been more and more danger, as we've talked about before, that these things could break and they could break down. And in particular, that was true on the Russell. I'll bring it up one more time. And if you look at it, there was multiple swing points down here, and it tried like heck to break them, but it hasn't. And so far, the faster move down on the downside just has not been able to spring. And this has happened with huge divergence, where small caps are selling off at about 10%, and the large caps are sitting at all-time highs. And that divergence, maybe it's going to resolve to the north, maybe it's not. We just don't know yet. But right now, now it looks the other way, right? It looks like it wants to break to the top. We'll see if it gets over all this and it actually breaks or not. But it's close. And if they can push it this week, I think they get a good chance of trying to change this trend back around and get some sort of staggered stair-step stuff going on the way up. So it's a big week. We'll see what they do. On the sectors, there's really not, well, actually I was going to go to the world markets, but there's really not much to say about the world markets. They're all hanging at the highs. Every one of them, right across the whole spectrum. Nikkei is the only one not. The Hong Kong market, the Chinese market's heading back towards the highs, but then almost everything else is either at the highs or breaking over those highs. If we look at the sectors, you've got some very strong ones that continue to push. I'm looking at the IYT to start with. This one in the technology sectors, they've been the ones pushing lately. ABCD structure in place here. That ABCD structure is actually finished. It's already finished off this week, or it's right at it. So the ABCD structure here, and if we look at the XLK, the XLK actually broke out again on a nice push, but there's just nothing in it. The farther we go up, the less people there are that want to buy. That's not typically what you want to see. You want to at least see as many people want to buy, not fewer. But that's not been the case on the way up. XLE has been one of the strongest ones. That one's starting to falter and barely hang on up here at the highs. You can see it on the daily, a little bit less clear here on the weekly, but on the dailies it looks a little bit like one of the more weaker ones right now. If I look at the other three sectors that have been lagging, starting with the consumer discretionary, the last big bar down on volume was here on the 7th, the week of the 7th, 64.74, gets over it on Friday, again on no volume, but it's over it. If this one can push, that's one of the major ones that's left to turn. XLV's the other one. The XLV actually got a decent push last week, XLD is trying to get back over all the way back up to the prior highs. It's not that far away anymore. 60.50, it's at 59. So you're talking about $1.50 on 60, which isn't very much, 1%. And then the other one that has been lagging and still lags is the XLF, and the XLF still hasn't gotten over the breakdown bar. So the XLF, if we look at all the sectors, is the only one failing to get over the breakdown bar. XLI had been a strong one. It's struggling up here at the highs. You can see it again more clearly over on the daily. But, you know, on a weekly, it doesn't look bad. You're just hanging at the highs. So, sector-wise, still no huge damage. There was damage in 3 of them on the dailies. 2 of those 3 now are back over the areas that were very tough. You got 2 breaking out with the IYT and the XLK. And then finally, if we go over to the TLT and look at it, the TLT had come into this huge resistance bar, 114.08, got to 114 on the prior week, got to 113.96 last week. TLT looks like it's going to range trade now. So if it's range trading, if the general markets are able to move off the TLT, no longer pushing higher, and if the TLT actually starts to pull back down, you know, maybe that helps these other markets continue on. So right now, jury's still out. This week, leaning more towards the long side. Last week, leaning more towards the south. Which way is it going to break? If we go back one more time, and this time we'll use the weekly, but we'll look at the not the sectors, but the general markets, in particular the GSP-C, which has been the strongest one, the S&P 500. There's been a range trade on this, ever since back here. I mean, you can go back to this area, and that range trade has been in effect. Essentially, it was capping the highs back in December. In early, or late actually, February, you break over it, and then you range trade now, and you've had 3 attempts. Well, let me use a different tool. You've had 3 attempts to break out. You had this attempt here. You had another one over here, right? And now you have the 3rd one. Well, actually, there was a 3rd one here, and this is the 4th one. And then there was 1 attempt to break it down. In all cases, they got reeled back in, and they got reeled back in within a bar. We are up there again trying to break out. We actually are closing over the range. This is the first time we've done that. So as we get over the range, close over the range, it is imperative to get another push. Another push this week gives you another bar up here, and if you get that, then I suspect we're going to have to say the correction, however meek it was in this particular index, is probably over for now. And that would be particularly true if in fact the Russell did the same and got over those highs and went into a sideways motion. Doesn't mean this thing's going to just run, because I doubt that seriously, but it does mean it can do that creaking kind of up and back stuff to the north. And the correction would be over, and if that happens, it happens. I've not been in that camp. I'm still not quite in that camp. But, you know, I have to follow the markets wherever the markets go. I'm not, I'm not a high-priced Wall Street person that has inside information. I trade off the charts, and the charts are trend following. And you look at supply and demand at these key places, and you say, can you get over them or not? They do. Well, that's telling you something. And what it's telling you is nobody wants to sell it anymore. And if that remains true and you start pulling away, then that kind of seals the deal. All right, I don't have much else I want to talk about. I'll see if you have anything that you want and tackle that, because this week really comes down to, are these markets going to stretch away or not? And if they can, more power to them. I think it's going to be difficult, but they've got everything set up this week to allow it. You've got the ECB next week, next Thursday. A lot of times what you'll see is a push in the news. They call it buy the rumor, sell the news. If we do that and we just continue to push, I would expect some sell the news. But if you think about it, and let's just pull this over and look at it a different way, just consider a scenario where you've got 6 more trading days and this thing kind of does this and it essentially stretches higher into the news. Okay, so now it pulls back. Where's it going to pull back to? Well, the first thing it's going to do is it's going to do a retest regen off the prior highs. And so that pullback would be the place to buy it, right? Assuming that kind of action, if it comes back in volumes light. That would be the first time that volume actually wouldn't be heavy on the way back in. And not so much here, but especially on the other indexes. So if you see this kind of scenario and this thing starts creeping higher into the news, then yeah, sell the news. But sell the news doesn't mean that you're going to break down at that point. It simply means that you might be finally getting the retrace that gets you the trade into something that is going to try to go higher. Remember, something like 80% of breakouts fail. Most do not just keep going. That's not typical. What's more typical is they go and within 6 bars they come back. And if we saw this kind of a push up, stair step type stuff, and then a pullback, that would be that 80% thing playing over and over again. And then those, when they pull back within 6, it's about a 50% chance that they break down farther and about a 50% chance that they flip and go the other way. Now, certainly it helps when the trend has been up. This one's been sideways, so it would be a little bit more iffy, but that would be the area if in fact it plays out that way. And so, don't view because I've said it before, don't view a sell the news as necessarily the market's going to crash. It simply could be the retrace off the push into the news that potentially sets up the buying opportunity finally. Economics are not horrible. I've said that before. They're still not. They're nothing. What's going to move this market is the central bankers. If the ECB comes out and they really do QE, these markets are going to move. They have to. I mean, look what they've done for 4 years. It doesn't mean that the markets will just sit there if the central bankers keep pushing the string. That's not what you should expect. You should expect the markets to lift. How much? Well, we've seen that it's a diminishing return, so we should assume that it's going to be a diminishing return, but yet still another leg up if that's what they do. So if the ECB does it, if China does it, that's probably what we should expect. All right, I'm going to leave it at that then. I don't see any questions. Let me check my email right quick and my text. And no questions. Okay. Quick look overseas tonight since I happen to have the chart up. Let's see what they're doing. So it looks like the Nikkei's up a bit. Our futures up slightly. And nothing special tonight. It looks like a quiet night off the elections in Ukraine. No sign of trouble yet. All right. Thanks a lot. Oh, you want to see the EWZ? All right, let's take a look at it. EWZ actually pulled back last week, the Brazilian. I haven't looked to see when the soccer tournaments get underway. That's probably going to be, maybe they're already discounting that news by making this rally. That's probably going to be a factor, but I suspect the biggest factor here is China. This looks pretty good as it comes back in, Feedy. Yeah, it looks pretty good as it comes back in. This looks like a decent support zone down here as it's drifting back in. And the way it's set up here, it looks like it is going to try to come back into this area. And then that would be the test right off of all these big bars. So that's where I would be looking at it as it comes back in there. How much farther can it go? That's probably a good question, actually. Let's see what the weekly looks like. Yeah, see, it was a nice push up, nice volume, and then volume tails off. $46.29. Now this could certainly run up to that swing point high. That's not that far. 51.75. The other one's 55. Go back to the daily, the 46.29. It's a little bit low, so that's actually down in here on the weekly support. So you would want to give it these two swing point lows and probably trade off that area as your support. So probably you'd have to give it to the bottom of this bar. That's 45.31, so somewhere around 45 on a stop, and you're shooting for about, what did I say, 51? So yeah, 51.75. So it's playable. It's playable. All right, folks, thanks for joining me. Have a great night. Have a great tomorrow off, and I'll see you on Tuesday. No show tomorrow night. Have a great one. Thanks. Take care, and I'll see you then. Good night, folks.